Welcome to Core Finance, live from London. Sponsored by Beaufort Securities. Live on Facebook at Core Finance TV, and for you youngsters out there, Twitter handle at Core Finance TV. Matt Brown, morning to you, young man.
Morning, Moose. You well?
Right, living the dream.
Good.
Let's kick off with the market movers. Headline, European markets trade higher. Ex-Treasury Secretary Call says QE spending is like heroin. This was a bit surprising to say the least.
Well, first off, the market's trading a little bit higher, really been pushed higher by the miners this morning with some good numbers out from Antofagasta, the silver miner. BHP Billiton, headline numbers a little bit weaker than expected, but the important thing is we've spoken previously on the show about Elliott Advisors, got a 5% stake. They're activist investors. They're getting in, and actually the board are doing some of the things that Elliott wanted to happen, so potentially spinning off the oil business and a bond issue. So this is certainly helping the stock this morning, trading up about 2%, pushing up the FTSE. But one thing we honed in on this morning, an article in the City AM, the ex-Treasury Secretary, Lord Macpherson, a lord, he actually tweeted, so a lord on Twitter, believe it or not, so it's not just the youngsters.
President.
Yep, indeed, using Twitter, basically saying QE spending is like heroin. I think the Bank of England has spent about 450 billion there or thereabouts over the recent years. It's reckoned that every 200 billion is the equivalent of a 3% rate hike or spend. So look, it's a rate cut, I should say, but obviously if they unwind it, that's the equivalent of a 3% rate hike. The problem is it is like heroin. The central banks, this is global central banks, are addicted to QE. And the problem is with a heroin addict, the only way to keep them going is to give them more heroin. And that's the problem we've seen with the markets. So that's one of the key things to look out for. And what does that mean when that starts to unwind with Jackson Hole at the end of the week as well, looking for comments from Yellen. I don't think we'll see anything from Draghi on that front, any hawkish statements from him, but certainly Yellen, that's going to be in focus this week. And I think that's probably why we're seeing the dollar push a little bit higher this morning. The yen's underperforming, so dollar's breaking out, but still trading around that 110 handle. And above all of this, we've got Trump as well, issues with Donald Trump. He's like casting a shadow over the market like a lunar eclipse, which is worrying the market a little bit.
Right, let's move swiftly on to FTSE One to watch. Provident Financial Group, article in the Sunday Times Sunday, down 6% yesterday. CEO resigned.
Yeah, down, well, they're halved in value this morning.
Have they really?
Yeah.
Cut the dividend.
I mean, it's not a stock to watch if you hold it. You know, cover your eyes. Cut the dividend. Problems going on with the company. They've tried to restructure it with self-employed. This is a door lending, door-to-door lending kind of service, and they've tried to bring in self-employed people. That model isn't working, and there's a shadow as well cast over Provident with regards to the FCA, their Vanquish business. It's lending, and there's problems. And again, I think that's been highlighted over recent months, that the high interest loan sector is a problem. This could be a bubble. This could be, car loans, high interest rate loans could be a problem in the market. The FCA have picked up on it. The Bank of England are looking at it, and this could be a problem going forward. And this is affecting Provident.
Okay, let's move on to AIM, one to watch, H&T Group.
Again, in a similar space. Now, H&T are a pawnbroker, but they also have, I think, about 43% of their business is high interest loans as well. Now, there's two sides to the story. Gold is moving up. This will help H&T Group. But again, if the FCA look at their loan business and restrict them, this could be a problem for the company. So again, as an AIM stock,
sector-wide potential problem.
A lot of read across in the sector today.
Understood. Right, let's go on to the currencies. The Great British Pound, Euro, Great British Pound 91.65, and cable, Great British Pound against US dollar 128.56. Just same old slides.
Yeah, so same old numbers. Again, focusing in though on this dollar, I think this is going to be key this week, and we might even see some upside to the dollar. You did call it last week.
Thank you very much. Right, let's move on to broker upgrades. Just one for us today. The broker JP Morgan, Merlin Entertainment, a new overweight recommendation.
Yes, Merlin Entertainment, they own Alton Towers. A few years ago, obviously, there was an accident at Alton Towers. This affected the share price. They also own Madame Tussauds. So JP Morgan just basically saying, look, the stock's probably undervalued. Go overweight now. They operate in the UK, so bear in mind the pound is lower. So
yep. And
a
people
lot of
staying
tourists
at home for their holidays.
Exactly, staycations. We did a piece with Guy Schoen on that last week. Take a look at that, very important. But also Merlin Entertainment operate in Europe as well. So with Europe picking up, that could be positive.
Okay, let's wrap up this segment on the economic calendar. That's very dull, isn't it? In the US, 2 o'clock, the housing price index.
Yeah, again, nothing to get too excited about this end of the week. Focus, as we said at the start of the show, is Jackson Hole at the end of the week, but don't expect any surprises.
And anyone interested in newspapers, see in the City AM headline, there's a segment, A Decade On, Maki Kohori on lessons from the Great Crash. Have we really learnt our lessons? I'll leave you for that to think. Have a good day. Thank you.